One of the findings we had from the report is that investments have been at $1 billion plus, or at least in that ballpark for the last 4 years, and that's a pretty healthy number for the kind of startups that we considered. And even if you take the largest funding rounds in 2024 that we considered, there were 10 funding rounds at least in the excess of about $25 million. So there is a maturity of business models that is taking place. Of course, there is healthy activity at the early stage, but I wouldn't say that it's restricted there. One of the breakouts currently is this field that we call carbon and climate management in the report.
Hi, wherever you're joining me, I hope you're doing well. Welcome to India Tech Reports In Conversation, a podcast bringing you insights from entrepreneurs, investors, industry leaders, and other stakeholders in India's deep tech and climate tech ecosystems. I'm Hariharakli, and my guest today is Vishal Katariya, a member of the investment team at Ankur Capital, an early stage venture capital firm in Mumbai. Vishal is based in Bengaluru. It's World Environment Day today, and Vishal is here to talk about why and how India is uniquely positioned to lead in building climate tech solutions that work for the world. Vishal is one of the authors of Ankur's recent report on private investments in climate tech titled Transforming India's Core Sectors, along with one of Ankur's founding managing partners, Ritu Verma, Shiva Shanker, partner, and Debansh Sahoo, who's also on the firm's investment team. To quote from a brief on the report, entrepreneurs are drawing on India's deep talent pool, a problem-solving mindset shaped by constraint, and a lived understanding of the global south, not to chase emissions reductions alone, but because industries increasingly recognize that rethinking how we produce, grow, move, and power things is critical to staying competitive and creating long-term economic value in a changing world. The report presents a data-backed analysis of how startups and venture investments are shaping these efforts. It tracks 2020 to 2024 funding trends across India and global markets in 5 sectors: energy, food and land use, transportation, industrial decarbonization, and carbon and climate management. In this conversation, Vishal walks us through a quick overview of Ankur's findings and briefly touches upon the implications for founders and investors. Vishal, good to be talking to you again. And this time we are here to discuss your latest climate report. You all are doing some really interesting work, and you've made some investments as well in this space. Maybe for a general audience, just give us maybe a 1-minute snapshot of Ankur as a VC firm, your focus areas, and generally the type of startups that you all like to invest in. And then maybe you can walk us through some of the main findings of your report.
Cool. Thanks, Hari. Thanks for having me. As always, a pleasure to talk to you and be on the podcast. Just a quick snapshot about Ankur. We're a decade-old venture capital fund that's investing in early-stage technology-led startups in India. We've been at it for a while. We've invested out of 2 funds, and we're currently investing out of our 3rd and largest fund so far. We've invested in over 30 companies across 2 broad themes. One is digital-led innovation. The other is R&D-led deep science technologies. Climate as a theme within this has been important for us across both of these umbrellas or across both of these pillars. Our climate portfolio itself is quite vast. We've invested across, as I said, digital deep tech. We've invested across mitigation and adaptation. And we're excited about how things have gone with our portfolio companies in the past, 2 funds. Climate, again, remains an important theme for us with this fund. We just announced an investment into our latest investment out of Fund 3 into Vimano, another climate tech, deep tech and climate tech company that's making membranes for the energy transition. That's why we decided to take some time to put our thoughts together, both from a quantitative and qualitative perspective in this climate tech investments report. The report is called Transforming India's Core Sectors, and our overall view is that more and more climate interventions across different sectors, mobility, food, energy, and so on, are becoming just sound economic decisions. Of course, bolstered by the need to decarbonize various industries, various sectors. And we've seen that reflect in the investments, we've seen that reflect in the majority of the different kinds of diverse business models, and so on.
One of the things that caught my attention was that some sectors seems to be getting disproportionately more investments, whereas others, which may actually be responsible for significant levels of emission, are probably not attracting the type of investments that they ought to. Can you walk us some of these findings?
I think that's a great point, Hari, and this is actually true not just in India but across the world. That the uh, the emissions of a certain sector versus the investments that they've garnered are not really proportionate. To put to put things in context, we all know that electric mobility has been one of the largest themes when people think about climate and clean tech. That's maybe the first thing that comes to mind. However, transportation does not contribute as much to global or Indian emissions. It's between 10 and 15%, but it's garnered almost half of the entire investments from a venture perspective. So this comes back to what I was just saying about the primary motivation for these investments is the fact that they are economically just making sense. From a mobility perspective, we've really seen the TCO story, or the total cost of ownership story, play out. Fleets, B2B models, various types of mobility players have recognized that electric mobility has a very cost competitive total cost of ownership as compared to a fossil fuel based fleet, and therefore have made the change. This, of course, has climate effects. It's great for the climate. But the primary motivation has been the economic one, and that's why we've seen a disconnect between the investments and the emissions. uh, One of the things we talk about is the industrial decarbonization story in India, in particular, being extremely nascent. Indian investments, only 4% of Indian climate tech investments have gone into industrial decarbonization, but industry contributes to about a quarter of emissions both globally and worldwide. Part of this is because there are interventions that you can make to make your industry less carbon intensive. Some of these are low hanging fruit, some of these are deeper decarbonization efforts. However, the cost of abatement, which is a term used in terms of dollars per ton of CO2, is pretty high. At this point, various technologies have cost of abatement, between $200 to $500 per ton of CO2, and that isn't really correlating with the kind of price people are willing to pay, or the kind of benefit they might get by decarbonizing. Therefore, we need technological improvements to happen, particularly on the industrial decarbonization side, for investors to also come in and say, yeah, this is at a point now where deployment is really going to scale up.
Hmm. Earlier, you spoke about investing in a company called Viman, right? Deep tech and climate tech, sort of. So that's another thing that I have also noticed. I mean, as a general tech reporter, that there is a fair amount of overlap between what is needed to tackle climate change and the sort of umbrella deep tech area, because a lot of these interventions probably have to come from deep science based interventions and innovations. Um, so, can you drill down into the industrial decarbonization aspect a little bit more and talk about why it's not seeing enough investment, even though the potential seems to be really huge in terms of you know the opportunity to innovate and build new products?
Yeah, I think that's a good question again. And maybe let me take cement as an example. A lot of industrial emissions come from cement, and cement's emissions primarily come from the process where CO2 is released just in the chemical processes involved in manufacturing cement. Therefore, efficiency improvements or process improvements, introducing sensors, data, getting people to talk to each other better, are only limited in their scope for decarbonization. To decarbonize a process like cement manufacturing, you need a new process, or you need an improved process which has to come from R&D. And that's why, again, and that's why you would need a kind of deep tech company or a deep tech approach to decarbonizing cement. We've seen companies in the West work on algae-based solutions, work on electrochemical-based solutions, which fundamentally reimagine the way cement is manufactured, and therefore to bring that cost of abatement, like I said earlier, of industry of decarbonization down, you would need a fundamental process change. And at the same time, there are, of course, low hanging fruit that you can use to make your industries a little more planet friendly. But because of the nature of them being low hanging fruit, and because we in our report have focused on venture funded companies, there has not really been a match in terms of a venture capital investor like us would not find it that exciting to invest in a kind of incremental improvement that's resulting in a 2 to 3 4 5% reduction in CO2 emissions. So while that is happening in the real world, the real innovations that move the needle have to come from an R&D based approach. I talked about cement. Obviously, steel has a very similar story going on. Other industries like waste, recycling, and so on are a little less at the cutting edge of R&D, I would say, but there is still an element of extreme process innovation you need to bring increased decarbonization.
Mm. So, what are the factors that are influencing all of this? In the sense that we know that as a proportion of GDP in India, R&D is at an abysmal level, some 0.7% or whatever. That is one aspect. The other aspect is, do we have that sort of initial critical mass of real basic sciences R&D that can feed the know-how, into industry, into private industry? I mean, for example, ISRO opened up its entire knowledge base to the private sector and said, borrow from us, we'll help you develop the tech and all of that. Similarly, in these kinds of areas, does that at least exist at the academic level? That's one aspect. The other aspect is a lot of these are not software investments, right? They are real hardware based innovations, which means that money needed will be much higher. I'm assuming that, and especially as they want to scale, that probably will be much higher compared with how you could scale a SaaS company or something like that. And probably the Indian funding ecosystem may not have that level of depth or capacity to support growth, especially if someone actually gets to a point where they have a commercially viable product. I mean, I'm thinking a lot. I mean, you can correct me if I'm wrong. So my question is, what are the different factors feeding into this lack of support for innovation in these kinds of areas?
Understood. I think one of the key things is particularly on the tech-led innovation side that I would say that India does have good amount of fundamental R&D going on, whether it's material science, whether it's civil engineering, whether it's biotech and so on. However, you know, as an investor, we are looking at a technology that's kind of at the intersection of, yes, there is fundamental innovation, but yes, it is also pertinent to some application today, and there is a pathway to getting this to a cost effective, real world deployable and scalable solution. And I think to tick both of these boxes, those technologies are not as frequently found in the ecosystem as of now. I think that's changing. I think, on the, let's say, battery chemistry, battery technology side, we also have one and now two portfolio companies. We have seen a mindset shift where researchers are thinking about productization pretty early on in their research journey, and therefore preparing themselves for entrepreneurship, preparing themselves to scale, commercialize their technology, and talking to the right stakeholders. At the same time, while that is heartening, it also needs other stakeholders to participate. This can include policy, industrial conglomerates, and so on. Industrial conglomerates in India have definitely been a bit slow to adopt and partner with the these deep tech innovations. But again, we're seeing that change. I think that a lot of them are learning from the activities done by larger global conglomerates, whether it's American, Japanese, Korean, all of those guys, and realizing that, yeah, to stay long term competitive and to become global leaders themselves, they need to partner with and adopt these new technologies. So we are seeing that again move to a better sign. The capital will come, in our opinion, the capital will come when when the path to large scale deployment becomes clearer and clearer, and when there is a clear story of, yes, if XYZ things are done, this technology is going to be cost competitive. At this point, I think a lot of conversations have been vague. As those become more sharp and nuanced, we will see capital come in and deployment scale up. And we're already seeing that with some fundamental things, and we'll see that more and more as time goes on.
For now, would you say or would you agree that the focus sort of remains on early stage funding in India by and large?
Not really. I think one of the findings we had from the report is that investments have been at $1 billion plus, or at least in that ballpark, for the last 4 years, and that's a pretty healthy number for the kind of startups that we considered. And even if you take the largest funding rounds in 2024 that we considered, there were 10 funding rounds at least in the excess of about $25 million. So there is a maturity of business models that is taking place. Of course, there is healthy activity at the early stage, but I wouldn't say that it's restricted there. Some sectors are more further along than others. I think one of the breakouts currently is this field that we called carbon and climate management in the report. This is essentially, you can think of it as carbon removal, carbon intelligence, earth observation, and so on. We think that this sector is super early, but we also feel like India is very well set or very well poised to be a global leader in carbon removal technologies. I think we've more tech-led approaches in the West, including direct air capture or industrial carbon capture, have faced basically economic roadblocks. The technology is not yet at a point where it is cost competitive, but India is leading the way with things like enhanced rock weathering, biochar-based solutions, and really pioneering the at-scale deployment and at-scale generation of carbon credits to be kind of a carbon removal hub for the world. So in that field, in that sector, one of the five we covered, I would say yes, the focus is on early stage investments and to see how these companies go. But on everything else, energy, food and agri, as well as transport, I think there's been a healthy balance between early and later stage. Of course, industrial decarbonization, like I said, because we focus on venture funded startups, we've seen a lot of concentration in battery recycling, but not too much going on in other areas like general recycling, like sustainable materials, sustainable fabrics, and even wastewater and air treatment. Many of these technologies are kind of on the cusp of hitting their larger scale up journeys.
Can you explain this a little bit more? Some of the technologies that you mentioned where India is doing well versus the Western, one of the ways they're doing, I think, is just literally pushing air through very large filters, grabbing the carbon and then sort of concentrating it, packing it, and burying it deep down in the earth. Um, you mentioned a couple of innovations in India. Can you? And I'm not familiar with these, and
Sure.
I would imagine our audience would also like to get a sense of what's happening. Just walk us through that.
Yeah, so we're very excited about enhanced rock weathering. It is highlighted by two kind of recent pieces of news. One is a startup called Alt Carbon that just raised a $12 million Series A, making global waves. Another startup called Mati, which recently won a $50 million prize in the form of the X Prize. Both of them are leveraging this kind of natural geological process where you spread finely powdered volcanic rock like basalt onto fields, so it can be tea, coffee, rice, whatever fields you want. It improves soil fertility to some extent, but more importantly, these rocks, when they react with rainwater, form carbonate materials which eventually lead to rivers and then oceans. That results into permanent carbon removal. By permanent, we're talking about thousand plus years of carbon sequestered at basically within or at the bottom of an ocean. And these companies, along with others, are developing very large at scale projects that, again, have the potential to scale much beyond where they are today. Half a ton of, I think, a ton of basalt will sequester, zero point 0.4 or zero point 0.5 tons of CO2. India has abundant reserves of such rocks, and there is a pathway to do scientifically backed, proven, certified carbon removal. Similarly, biochar is a process that is kind of ready to scale. It is a pyrolysis process where you take agricultural waste of different kinds and you burn it in the absence of oxygen, and that's what pyrolysis means. So when you do that, you convert it into a kind of activated carbon material, which is biochar. This can then be used as an agricultural input. It improves soil fertility, agricultural productivity, and so on. At the same time, it does lock in carbon in the soil at a for a very long time scale, which is considered permanent carbon capture. So these two technologies are, they're not high tech. They're not. There's no award-winning research going on here. There is tech involved. There is a lot of process improvements. There is scientific backing for these, and we think that the combination of that, along with India's situation with respect to agricultural waste abundance, volcanic rock abundance, as well as the makeup of Indian agricultural fields and the requirement for productivity increases, all of these dovetail together to make these two technologies in particular kind of ready to scale up rapidly. And we have startups playing their role in doing that.
I want to ask you about areas that you found exciting, and maybe we can talk about some examples. But before that, can you give us a sense of what you found with respect to the whole energy sector? What is happening there? Which is good, promising? What is work in progress? And what needs to be urgently stopped?
I think one great, amazing thing in India has just been the rapid deployment of renewable energy. Solar and wind have become cheaper. The deployments are rapid, and even though we have set ambitious targets of about 500 gigawatts by 2030, we may not get there, but we will get to a very meaningful fraction of that. That has been probably the number one green energy story in India. On the flip side, I will say that energy generation capacity of renewables has increased. However, at some point the grid will hit a sort of inflection point where renewable energies will move from a minority to a significant fraction of the grid. And at that point, you will need like kind of a second gen of energy technologies that can deal with the variability and intermittency. So right now, let's say a city or a country is getting 10% of its energy from renewables. If there's a little bit of fluctuation, they always have their, base load fossil fuel based power or maybe nuclear power that can plug in for that. When your renewable energy capacity or generation, when your consumption demand is up to 40-50%, the story is very different. So we have overnight battery storage uh, technologies that are kind of ready. I think I recently saw a chart that said in California, batteries can supply up to about 33% of a day's power at their peak period during the day, which is very impressive. India will get there, at least with overnight battery storage. The technologies are kind of ready. However, longer term storage in the form of 4 to 7 days or even seasonal storage is something that's more nascent. And I think that's partly why we also invested in Vimano. We think that they will plug into redox flow batteries to enable this week long or slightly longer energy storage, which is not it's not there yet to deploy. At the same time, we also are very excited about the decentralization story of Indian grids. We think that DERs, which are distributed energy resources, are going to play a major role. This There's a lot of acronyms here. So there's VPPs, which are virtual power plants. There's V2G or V2X technologies, vehicle to grid kind of technologies, which will come in. We've seen a lot of positive movement in India on the rooftop solar demand. I think I recently saw on some podcast or article that rooftop solar is growing faster than quick commerce in India. So rooftop solar is a really secular story happening, and as this happens, it will change the way the grid fundamentally works. It will decentralize things, and it will introduce the concept of this prosumer, a consumer and a producer together. Obviously, this needs grid upgrades. It needs a lot of electronics. It needs smart grids. It needs better communication. So there's an opportunity there, and we also see this being a way to de-stress the larger grid, as it also needs to make its upgrades to kind of cater to this simultaneous download and upload nature.
Can you talk about Vimano a bit more? I mean, since you mentioned it in the context of energy technologies, just tell us about what they're doing. Why did you think they were interesting as a VC investor?
Yeah,
Yeah.
thanks. Always happy to talk about that. Vimano is, like we discussed earlier, a company at the intersection of deep science tech and climate tech. They have a nanotechnology platform where they are able to create ion conductive membranes for different energy transition applications. So a membrane's job is to conduct, or an ion conductive membrane's job is to conduct ions, conduct energy, electrical energy, while conducting the right type of ion. So you have to increase the throughput while allowing the right kind of ions to flow through. And this has become super critical for different types of what I call the second gen of energy technologies, green energy technologies, redox flow batteries, which are based on things like vanadium, ion, green hydrogen, both on the generation or the electrolyzer side, utilization or the fuel cell side. All of these together need new membranes that are custom built for these applications. So far, neither flow batteries nor green hydrogen has been a very large market to justify the creation of application specific membranes for them. However, we see both of these markets inflecting in right now. Actually, that's happening as we speak, and the demand for these membranes to be extremely large. At the same time, membranes are tricky. There are a lot of issues with incumbent membranes. Some of them use fluorine. Many of them are not. I mean, none of them are really custom designed for these applications. There is a trade-off between conductivity and selectivity, like I just talked about, which you kind of need to get to the very edge of, and the cost is also very high. We think Vimano has innovated on all of these. They have found out ways to make cost effective, fluorine free, custom membranes for each of these applications, which they will be commercializing very soon. We really like platform technologies. So we like the fact that they have a core technology platform, which then they can spin off into cation exchange membranes, anion exchange membranes, and even if need be, they can do things like thermal management membranes, which they've done for space tech applications, and even you know cater to other applications like you know gas purification for semiconductors, industrial gas separation for different types of industries like the chlor-alkali industry, and finally even purification of green hydrogen. That is an increasing theme that's playing out. So we really are excited that there are platform technology at the right time at a pretty significant technology readiness at this point. So they're going to be able to commercialize their first set of products in a year or two's time, and we're excited to be part of that next 4 5 years journey where they will be kind of a material science company for the energy transition at a globally competitive level.
At what stage was this funding?
This was a seed stage, so the company raised about $2.7 million. Uh, their technologies are about TRL 5 6, which they should be able to commercialize, like I said, in a year or two's time. And some of the other technologies are earlier on in their journey, so uh, there will be a couple of parallel tracks going on. There will be the early stage commercial, there will be the early commercialization, and kind of the late R&D for the second set of products.
Mhm. Uh, can you tell me briefly a little bit about the founders? What is the experience that they're bringing to
Sure.
this?
Yeah, I think that's a good question, because for any deep tech company, actually for any company, the founders and their vision is very important. Vimano has two co-founders, Murari, who is kind of a young technocrat. He's done a master's in material science from the University of Pennsylvania. He's been very passionate about entrepreneurship and products or product platforms to boost the energy transition. He's joined by Dr. Nagesh Kini, who's who's obviously again a material scientist. He used to head the Center of Excellence at Thermax on material science for a number of years before Murari and Nagesh met and eventually decided to join the company. So together they bring deep technical expertise, of course, especially with Nagesh's research experience over multiple decades. At the same time, they are very outward looking in terms of tracking what's going on in the industry, making sure that they are creating the right products and the right modalities or the right form factors for customers, which is very important. I think what we've noticed in our overall deep tech ecosystem engagement is that it's not just enough to have the best technology platform. You also have to make sure it's sellable, that somebody wants it, and it's kind of in the right form factor or the right business model that somebody is willing to kind of take the plunge. And I think most importantly, from Vimano's perspective, we see that very clearly informing their day-to-day activities in the way they're approaching product development, testing, customer conversations, and even supply chain vendor tooling conversations.
Mm. Where are they based currently?
They're based actually just here in Bangalore, so
Okay.
they're not not too far away.
Okay, okay. And was this an entirely Ankur-led investment, or were they you led the investment? There were other investors.
Correct. We led the investment, but there was a syndicate of a number of, again, deep tech interested micro VCs and angels who participated. So that, yeah.
So if we circle back to the report, the portion of your report where you've talked about the areas that you find promising, that are really exciting for you from a sort of VC investor's perspective, can you just walk us through that?
Yeah, absolutely. So one of the interesting things, again, through the entire data collection process we did for the report, is we realized the diversity or the lack of concentration of investments into any particular sectors. This is a good sign for us. So obviously there are business models that are maturing. So as I said, 2024 top investments, we had multiple investments over 20-30 million dollars across different sectors. So we've seen obviously transportation, electric mobility play a leading role in that, as well as climate friendly solutions within food and agriculture. Energy is picking up significantly as well. What this means for us is that there has been a first gen of kind of climate tech innovation in India uh, over the last 5 years, which has the early stage of that has played out. Many of these companies are now focused on scaling up. A kind of second gen is now emerging. Companies that are now raising, a seed or a Series A round of funding across all of the sectors. So, like I said, carbon climate management with that carbon intelligence, carbon removal, it's very exciting for us. There are project developers, like I mentioned, companies doing enhanced rock weathering, which is exciting to us. But there are a lot of ancillary technologies there. So there's MRV, which is measurement MRV solutions that are going to play an ancillary role in supporting the carbon market in India, and as well as new types of Earth observation intelligence that are going to be needed. On the energy side, like I said, distributed or a decentralized grid is emerging rapidly. Rooftop solar is kind of becoming a platform technology on which further technologies will be built. This can include smart grids, it can include electronic solutions, it can include energy solutions, it can include digital solutions being built on top of the universal energy interface, which is like the energy equivalent of UPI. Finally, on the industry side, I think we're seeing a lot of movement. We're seeing early stage technologies beginning to scale up, particularly on air and water treatment. We see these as huge pain points in industries and for consumers, and the need for kind of differentiated technologies to come through. Finally, on the food and agriculture side, this is an area that, as at Ankur, we've been super invested in from the very beginning. We recognize that any intervention, any solution has to be tailored to Indian contexts, and this offers like the flip side. It means that there is a huge opportunity because there are so many niches to attend to. At the same time, because of that, because of sometimes the lack of structure in the market, it is difficult to scale a technology up. So with this dual sided opportunity challenge equation, we think that there are still a lot of interventions to be made in food and agriculture. This can include, better biostimulants, better agricultural inputs, sustainable fertilizers. This can include further optimization of supply chains. We've already seen the first layer of digital first supply chains, companies like Bigro, Captain Fresh in our portfolio that have driven food loss down, for food wastage down from about 30% to sub 5% in their respective industries. We see that continuing to grow, and and obviously there is a autonomous farming or a farming automation, precision agriculture movement that's going on. I think it has picked up in global context to a larger extent, but in the Indian context specific solutions are still being developed, still being deployed, and I think it's at an interesting point where we're still waiting for like the perfect solution to really meet needs and to take off.
Can you give one example of what is currently there in the richer countries when you talked about autonomous farming and precision agriculture, but which may not necessarily be suited right now for Indian conditions?
I would take, the example of hydroponics in greenhouses, which has been picked up to a very large extent in some Western countries for, you know expensive crops, or luxury crops almost. uh, Salad greens, berries, and so on are grown inside these places, and for very high quality. Now, obviously, India with its different cost structures will need a different kind of automation or a different kind of precision agriculture that maybe doesn't go all out, that maybe requires less capex, and that kind of optimizes for a different set of parameters to ensure it solves, or it increases productivity and generates value for farmers and consumers. I'm not sure what that's going to look like. It may, we may not see huge greenhouse farms with just one farmer attending to, multiple greenhouses. Because of the smallholder nature of farms, we'll probably see something different. We'll see a kind of semi-automated plant that doesn't need to be fully teleoperated, but there will be an element of climate control that's again cost effective. That we've seen a couple of initial models in India. Eki farms, for example,
Yeah.
is doing that, but I think for things to deploy at scale, we still need further technological improvements, and almost like product market fit to a better extent.
Okay. To sort of conclude, in the context of the findings of your report, if you were to look at over the next, say, 2 years, from the point of view of where would Ankur want to invest in, can you give us a sense of what might be the top priorities?
Sure. Actually, even before I answer that, I'll just step back and highlight that Indian climate tech investments have been super robust. From 2022 to 2023, I think Indian overall venture investments fell about 60%, just because 2023 was not a great year. But climate tech investments only fell about half of that. And they've quickly come back, rebounded to 2021, 2022 levels, which overall investments have not done. So that gives us, at a macro level in India, a good picture of, yes, climate tech is kind of here to stay. It is not it's not a kind of trend or a phase that will die down soon. In terms of areas, or top couple of areas that are interesting to us, I think we are very interested in advanced materials for both energy and industry use cases. So this can mean graphene technologies, it can mean advanced ceramics, it can mean new types of construction materials. Geopolymer concrete is something that we've been looking at lately. We're also interested in overall earth and climate intelligence. It will plug into carbon removal, plug into food and agriculture, and we think that the particularly space-based solutions and the intelligence that they give are still picking up. It's a story that's kind of mature. There are many satellites in space. There's many types of data that you can procure as a end user, but there are newer payloads going up. There are new ways of doing the analysis of that data, and people are talking about actually putting edge computing in space to do some of that processing up in the satellite itself before beaming it back. All of these are kind of loosely connected to that Earth observation and Earth intelligence, which is still an area that's playing out and something that we're quite excited about, both from a hardware perspective and a software/AI perspective. I think energy transition technologies are going to be super important as we go on. As I said, there's kind of a need for a second gen, and we're interested to see how we can continue plugging into things like energy storage, like hydrogen, like industrial heat capture or industrial heat utilization, and so on.
Okay, Vishal, thank you for doing this, and I hope to keep the conversation going.
Thanks so much, Hari. This was a pleasure. Thanks for having me.
That's it for today. You can find the link to Ankur Capital's report in the description of this episode. For my daily pick of headlines on topics like these, do check out India Tech Report Daily Morning Bulletin. And if you'd like to support my work, please follow this podcast wherever you listen to it. You can also subscribe to my daily newsletter, India Tech Report, to find everything in one place. I'm Hari Alkli. Thank you for listening.